For more on the market action, we are turning to Joe Tigay of Equity Armor Investments. Joe, the war took a wild turn with that hit in Poland, and retail sales in the U.S. popped up 1.3% in October as American consumers stand strong. What's your outlook for the market?
Yeah, it certainly is an interesting week, to say the least. Thank you very much for having me, Angie. And of course, we saw a huge rally last week, and then we got some consolidation so far this week. And really, we had that little bit of a topping action right ahead of the Poland news that we saw. So now we're kind of in a wait and see. We saw some value outperforming some tech on Wednesday, so that's not what I like to see in terms of the rally continuing. But on the flip side, we did see interest rates continue to come lower, so that's another feather in the cap for the bulls.
Well, Lowe's is reporting business is strong, while Target is reporting a slowdown. Some say Target's report is a hint that the economy is slowing and cooling off. And maybe, just maybe, the Fed will stop that hot pace of raising rates. What do you think?
Yeah, no, we are seeing some earnings coming out. Some companies like Target guiding lower. Some people are saying, hey, this is just saying the economy is slowing down. And there's two ways people are reading this. One way, of course, is that, the economy is slowing down. That's great. Interest rates are not going to stay as high for long as we thought. The Fed is finally going to pivot. The flip side, of course, is though, yes, the Fed might pivot, but if you go back and look historically, when the Fed pivots, they pivot when the economy is slowing down, and that's usually bad for equities and stocks. A slowdown in the economy would be bad for stocks. And then you might actually see the reverse relationship where you see bonds and equities back to finally being negatively correlated. And unfortunately, that might be when risk really starts to pick up because, of course, the economy is cooling down and companies will have a hard time meeting their earnings estimates.
Thank you, Joe.
Thank you for having me.
Go to businessfirstam.com for where to see our show on TV.